Welcome. My name is Rich Cagle, and I'm with Cypress Business Brokers. We're located in Houston, Texas, and serve Southeast Texas. We help entrepreneurs realize the value in their businesses. In this series, we're going to try to take some of the mystery out of valuation analysis. In this first episode, we're going to introduce some of the basic concepts of business valuation. In following episodes, we'll talk a bit about financial statement analysis. We'll also perform a valuation analysis of an example company. Our goal is to give you an overview of the valuation process and help you ask informed questions of your chosen valuation expert. We're going to focus specifically on how we might go about valuing a privately held company. This presentation contains general information about the valuation process. It is not intended to give you advice about your own particular situation. You should always consult with your own advisors and should engage a qualified professional to assist in any valuation assessment. The value of any object, including a business, is based upon the perspective of the person making the valuation assessment. A great example, when I was growing up, we had a pottery pitcher that we used daily. For dinner, it was often filled with ice water or on occasion Kool-Aid. Its value was utilitarian. It was a vessel to hold and serve liquids. One day, my mother had friends over, and one of her friends noted the pitcher was actually a valuable antique. The result, it went into the china cabinet. We never used it again. The value of that item changed. From the perspective of my mom, its value was no longer based on its utility, but was now based on its investment value. The takeaway here is that there is no one value. Value truly is in the eye of the beholder. In the case of a business valuation, a valuation report provides a defendable estimate of the value of the business from the perspective of the user of the report. Who might want a valuation report? A business owner, perhaps contemplating the sale of a business to set expectations for pricing. An investor or buyer would be interested in determining whether or not the asking price is consistent with the value of the purchase or investment. A lender would want to know that there is substantial value and the business is capable of generating enough cash flow to service the debt and also provide an income to the owner. A partner or shareholder in a private company, perhaps considering retirement or to settle a dispute. The IRS to establish market value of a company and to assess tax. Each of these potential users has a different perspective on the company's value. To further complicate matters, from each party's perspective, there could be three different values depending upon the circumstances. Fair market value is the value at which a willing buyer and seller would agree to exchange ownership of the business in an arm's length transaction. Fair market value is an accepted measure under tax law and in most courts, and is the value generally used in a business setting. Replacement value is the cost to replace a particular asset, being a piece of equipment, a building, or a company. It may or may not reflect the fair market value, but in some circumstances, to settle an insurance claim, for example, it may be the most appropriate measure of value. Liquidation value is the value which a buyer would pay in a distressed sale, such as a bankruptcy. We'll spend our time today talking about fair market value, as this is the most widely accepted value estimate. There are three general approaches to estimating value: the asset approach, the market approach, and the earnings approach. We'll talk about each of them in a little more detail in a minute, but first let's establish that they each have their strengths and weaknesses, and that sometimes we might utilize several or even all the approaches to get perspective on value. Facts and circumstances will dictate which approach is most appropriate for a particular valuation. The asset approach attempts to appraise the assets of the business, both tangible and intangible assets. The asset approach may be the most appropriate approach in some circumstances. Cash and marketable securities have readily obtainable values, but everything else requires some analysis. Note that the asset approach is not the same thing as book value, the historical cost recorded on the company's balance sheet. In a publicly traded company, we could easily compute the market capitalization of the company by multiplying the share price times the number of shares outstanding. In a privately held or thinly traded company, it's not so simple. There is no established share price. We could look for recent sales of similar sized companies in the same industry. The difficulty here is that most businesses are unique, and we still need to make subjective judgments to account for the difference between the example sales and the business under consideration, particularly looking at the circumstances of the example sale. Was it between related parties, for example? or under duress. I'm not going to spend any more time today talking about the market approach, but I wanted to mention that it's sometimes available. The earnings or the cash flow approach develops a financial model to establish value. The underlying theory here is that the assets of the business in total are in place for the purpose of generating cash flow. Their collective value can be determined by looking at the cash flow levels generated by those assets. We then ask, what would a willing buyer pay to take control over a stream of cash flows? Thank you for your time today. I hope this has been informative. In this episode, we covered some of the basic concepts of valuation analysis. In the next episode, we'll talk about some ways to put a value on earnings. Later, we'll cover financial statement analysis, and then we'll put it all together with a valuation analysis of an example company. If I can offer any assistance, please feel free to contact me. Visit us on the web or on Facebook. I'd love to hear your comments and any suggested topics for the next program. If you'd like to be informed when the next presentation is available, please send me your email address. I promise to respect your privacy and will never share your information with anyone.